Ladies and gentlemen, so here is the updated version of the bank reconciliation. I hope you're excited. Ooh. Alright, so I'm going to start off with a basic example, and then I'm going to do one out of the exercise series that's a little more involved. So remember, this normally isn't done by normally everyday folks like you and I. This is done by large businesses, maybe even mid-sized businesses that have large volumes of transactions. So that's where it's necessary. So with online banking and everything, for the individual, this really doesn't apply anymore. This is back in the olden days when they had a lot of paper checks. People would balance their checkbooks. So that's kind of like what a bank reconciliation is. You're balancing the company's checkbook. So we are going to do practice exercise 7-3A. And if you have the printed copy of the text, 12th edition, it'll be on page 345. Alrighty. Let the games begin. So you might have seen, if you watched in part 1 of the video, the way I set these up. So the way they do it in your homework and the way they do it in the lab template, it's formatted a little different. So I try to simplify things by saying, okay, we'll do one column for the books, and then we'll do one column for the bank. Okay? And then we're going to put the balance in according to both of those records. So the balance per the books is going to be, looking right at the problem, they give it to you, is 11,655. Okay, so that's the line that says balance per company records. Alright, and the balance per the bank is the first line in the problem, 13,450. Okay. Alright, now we're going to go through the rest of the items. We've got 4 items to look at here, and we're going to say, okay, where do they belong on the reconciliation? Do they belong on the book side or the bank side? Okay, the first item listed is bank service charges. Okay. Now think about this. If the bank is charging those services, don't you think they've already accounted for that on their end? Yes. Okay, so they're not going to charge something if they're not going to record it on their records. So it's already reflected in the bank's records. And a lot of times you'll see it on your bank statement. So you'll see the bank charges on the bank statement. So if they're already recorded there, there's no reason to adjust the bank's books or the bank balance for that amount. Okay, so it belongs in the book section. So we normally don't find out about fees until we're notified by the bank that they've been charged. So we will adjust our books to account for those fees. And so the fees are going to reduce our cash balance. So bank fees, we're going to put that in as a negative 45. Okay, so we're done with that one. Next is a deposit in transit. Okay, so who makes deposits? The company, or we make deposits into the bank. So the bank is not going to find out about those deposits until we bring the deposit to the bank. Alright, so we are also not going to make a deposit until we record it in our books. So we're going to have cash receipts, we're going to have a bunch of checks that have been written to us that we've gotten in the mail. All of that, we're going to fill out a deposit slip for. We're going to enter those receipts into our books or into the company accounting system. So we've already accounted for them. So who doesn't know about them yet? The bank. So if they haven't been reflected on the bank statement yet, like if it was too close to the end of a period that cut off, those will be in transit at that point. So we will put deposits in transit on the bank side. And that is going to increase the bank balance once those deposits get posted by the bank. Okay, next, insufficient funds check. Okay, so if a customer screws us and writes us a hot check, then, okay, we've entered that check into our system as if it, is as good as cash. So how are we going to find out about an insufficient funds check? The bank is going to tell us about it on the bank statement. So the bank already has it recorded, so we have to record it on our end. And so what is the bank going to do with that check? They're going to decrease the cash balance, so we have to decrease the cash balance on our end. Okay? So we'll just write that. Non-sufficient funds check. That's what NSF stands for in it, non-sufficient funds check. So that's going to decrease our cash balance of $1,800. Okay, next are the outstanding checks. So remember, those are checks that we've written as the company. So we're not going to cut a check unless we enter it into the books. So we cut the checks, they're entered into the books. So the bank is going to reflect those after after the checks go to the customer deposits them into their account, and then the banks in between each other draw those checks. So outstanding checks have not been reflected by the bank yet, so we will put those on the bank side. And what are they going to do to the bank balance once those checks clear? They are going to decrease our bank balance. Okay, and that's all we have to work with. So the adjusted balance should match, okay, on both the books and the bank side. So if I net 11,655 with those reconciling items, let's see what I get. Let's see, 11,655. I got a calculator here. It says that the adjusted bank balance, or the reconciled balance, should be 9,810. So the same thing should come up on the bank side. So in theory, the balances should be the same. So the problem is the timing of when the items hit. The timing of when things hit the bank differs with the timing of when things clear the books and get entered into the books. So that's the whole thing, is an issue of timing. And I just netted the bank side down, and it does match. It does come out to an adjusted or reconciled balance of 9,810. So we're good to go. So what if we accounted for all these reconciling items and they still didn't match? Okay, well that means there's something going on. There's something missing because they have to match. If they have to match, there's either an error, there's fraud. Okay, there's an error either on the bank side or on the customer side or the book side, or there's some fraud going on. Okay, so that's why they have to balance. Okay, if they don't, that means there's something missing. Something is missing. Okay, now that was a very basic example. So what we should do, we should go ahead and do a little more, an example that's a little more involved. So I'm going to go to the exercise series. Let's see, the exercises. And I had one pegged, let's see. Exercise 7-18. 7-18. Oh wait, I just messed up something. Okay, so before we go on to that example, let's finish this example. Then, so the thing that I missed, that I didn't finish before I started jumping the gun, was the journalize any necessary entries. Okay, so remember how I told you in the Chapter 3 video that you never adjust cash? Well, this is one of those few times that you actually adjust cash, because you're working with the cash account. So, other than this, no adjusting journal entry should ever affect cash. Alright, so what is the adjusted balance? We answered that. This is part A, 9,810. So the necessary journal entries remember, we're not going to adjust the bank. The bank is going to adjust the stuff on their own. We leave that up to them. We're only going to adjust for items that are on our side, the book side. Okay, so this is actually real simple because we have two decreases. So those decreases, how do I decrease cash? Well, I would have to credit cash to decrease cash. Okay, so cash is going to be credited. And we're decreasing cash for the total of the two decreases, 1845. Okay, so what do we do on the debit side? So the bank fees is going to be some kind of expense account. And so we can maybe have a special expense account for fees, or if we don't have a special account for fees, we could put those in miscellaneous expense. So it just depends on how the company accounts for those fees. So we would debit the miscellaneous expense for $45. Okay, the other $1,800 debit. Alright, so if it's an insufficient funds check, who do we normally get checks from? Customers, alright? So if the customer wrote us a check, they either wrote us that check up front, or we bill them for something that we did in advance. So like we did some work for them or sold them a good on credit. Okay, and so we debited an account receivable, and then when we receive the check, we credit accounts receivable and debit cash. Okay, so we're basically going to reverse that entry. Okay, since that customer's check came up hot, or insufficient funds, oh shoot, we're going to put their receivable back on the books. Oh crap. My pen started going nuts there. Make that kind of a little prettier. Alright, so we put the accounts receivable for whatever customer it is. So we would have put dash customer X or something like that. And that would be it. So that would be all for example or practice exercise 7-3A. So now let's move on to exercise 7-18. Okay. So that one's really good. Let me write that down here. It has some additional types of reconciling items. Okay, so again, how are we going to set it up? We're going to put the books on one side and the bank on another. We're going to put our balances, the unadjusted or unreconciled balance. Okay. Sorry, I'm dragging a little bit here. So this is on page 349 in the 12th edition. Okay, so the cash balance according to the company records, that's the book balance. That is going to be $31,080. And then cash balance according to the bank statement, $38,280. Okay, then we go through the reconciling items that are listed. So it looks like there's 4 other items. Checks outstanding. So we already talked about outstanding checks. Those are going to be a reduction on the bank side because the company has already accounted for those. So negative 12,460. Deposits in transit not recorded by the bank. Again, that goes on the bank side. So that's a positive 5850. Right, and then a check of $180 in payment of an account that was erroneously recorded in the check register as 810. Okay, so that's a transposition error. So we switched the 1 and the 8 around. Okay, so check register, that means that it's on our side. So the check register is a component of the company's books. We write checks and put them in a check register, yada yada yada. So when we enter it into the system, we incidentally or erroneously entered it in as $810. Okay, but then we got the copy of the check back with the bank statement. So nowadays the company or the bank will actually put a check copy in your online activity so you can actually see the check that was physically written. And it looks like it was for only $180. So what's happening there? So first off, we get the amount of the error. So we're going to take the actual check amount and subtract the erroneous amount. So this is correct. This is incorrect. And so 180 minus 810. That is a $630 difference. Now, what that means is that we've expensed or recorded $630 too much as being paid. So to rectify that, we're going to have to add that amount back. So that 630, that negative, that's telling me that my account, my cash is too low as a result of that error. So we're going to add back that error of $630. Okay, so remember that was a disbursement. The disbursement should have only been recorded as 180. We recorded it as 810. So we're going to add back the incorrect portion. We'll just call that a check error or something like that. Okay, last thing, bank debit memo for service charges. Okay, so we talked about service charges from the bank. That's a reduction. So we can call it service charges or bank fees. Okay, and that's it. So then we net down both sides and make sure they match. So what made that one busier was the transposition error on the check. So I'm getting 31,670. As the reconciled balance, and let me net down the bank side to make sure that matches. Okay, it nets down to 31,670 just like it should. Yay! Awesome. Alright, I'm so proud of that. Lovely. Alright, so that was part 1, prepare a bank reconciliation. And then the amount that should be reported as cash in part B, that's the amount we just calculated. Whatever the reconciled balance is, that's what should show up on the balance sheet. Because that represents the true cash balance that accounts for all the timing differences between what flows through the books and what flows through the bank. Now, we should go ahead and do the journal entries, even though it doesn't ask for them. So let's go ahead and do the journal entries. And part C, we already talked about that in the previous example. The reconciliation should always balance, because if it doesn't, that means there's an error, something going on. So for the JEs, we have an increase and a decrease, so we can just do two separate adjustments for that. So in the increasing entry, we're going to debit cash for $630. So that means something has to be credited. So if we paid an account balance, right? So we paid money to somebody we owed money to, or to somebody we owed money to. We would have debited accounts receivable. No, I mean payable, sorry. So we would have credited cash, debited accounts payable. So we debited accounts payable for too much. So we've got to put back that incorrect amount into accounts payable as a credit. Alright. And then next, we have the decrease. So we would have decreased cash for 40. So credited cash for 40. And debited bank service charge expense, or if we don't track those separately, we can just throw it into the miscellaneous expense account. Alright, now you don't have to do two separate adjustments. You could do one combined entry where you just do the net increase or decrease in cash. So we know that a net of those entries would have increased cash by $590. So again, I'm going to do this as a separate thing. This is as if we just did them as one entry. And there would be a $40 debit to miscellaneous expense or bank service fees expense. And then we would have also had the credit of $630 to accounts payable. And so the effect of that one entry is the same as those two separate ones. It just combines it into one, where you don't have to post two different entries. Okay, and that would, either of those approaches, either these two or this one, would give us the correct reconciled cash balance. Okay, well that was a lot of fun. I think I'm done with this video. I'm going to cut it off. I'm probably going to do another video that's in Excel that will help you with your homework and your labs, or your lab for this chapter. So stay tuned.